Good morning, and in this video I will explain you how to take the perfect swing for your Fibonacci retracement setups and how to really choose the good ones, because I see that there's a lot of mistakes. Okay, despite I explain this on my videos many times, I see on my community that there are some mistakes. So for example, this setup was taken this morning. We got take profit. I posted on my X. I post all my trades for now 2.5, 3 years, I suppose. All in advance. Now it's automated with my algo. I also will take back manual trading and post that there. So if you want to really follow all my tracking, you can just go on X. I want to really explain you how that works. First, I will use the acid daily high and low fib. This was an indicator made by someone in the community for the community, because I used to trace a Fibonacci from the lowest point of yesterday to the highest point of yesterday. And then I will have my 0 point, my 1 point, which will be the high and low of the day. The 0.5 will be a magnet, or at least a very big zone for me to establish the bias. And in between, we have quallers. And those levels, believe it or not, but look at the past, really act with nice support and resistance for your setups. So in between us, we will take different setups of swings that will break a high and a low and vice versa, to get a retracement to the 0.618. How to choose it well? So for me, I use the 1 hour time frame, okay, where I can see the lower time frame and I can see the higher time frame in an easy one chart. I noticed with time, I mean, it's been 11 years that I'm trading, that I don't need all information. The least information, the better. And if you see on the lower time frame, you see small highs and small lows everywhere formed, it's basically those wicks. Okay, those wicks are small highs and lows formed on the lower time frame, which is, I mean, very easy to understand in the 1 hour, and like this you get all the information you know. Now you will want to get trained of what is the small highs and the small lows. I usually give this advice of blinking a bit the eyes and look at really how the movement is formed, because like this you get least information, okay? But otherwise you can use the line chart, and you see that sometimes it pulls back a bit and it makes some tops and then pullbacks and vice versa, right? So here, you know, at this area there is a zone where a small high has been created, and we can see that this candle here before the new session has been created a little high. So that's exactly what we look here. And as we can see here, we have a bullish and a bearish candle, which makes us think that there is a top, right? And then price goes even further down. So we have with certitude that there is a high. So here, this high has been broken by this high. So we have this first this first confluence that has been confirmed to us. Now, in order for us to take even in consideration to short this, despite being in a very big bullish bias, we have to break a low. And that's what we do here. We have a low here, we have a low here, you know. It's very easy to see that we have a low here thanks to, again, the line chart. But you need to take in consideration the wicks of a candle. The line charts are just here to tell you, is there a high or low? And then you confirm through the candle. And we break it through this low, because that when you see that there is a doji like this, or I don't know if you call this really a doji, doji is more middle, but you see that there were a low made and then price piled up back up, you know. And this is very important, because you can see that, you can imagine that we have a retracement going on from this swing on the lower time frame. And that's what we see here. You see, we see that we have a retracement. So then we have two conditions that goes well. The other condition, according to the fib here, is that we are at the high of yesterday. And usually it gets supported or resisted pretty well. The nice thing here is that when I trace from my high to my low, my Fibonacci, so here's the levels, okay? You can look at the golden zone, so the entry point, 618, where is actually this level. So usually I look at two things. I look at if I have a level created, so something like here is a level created. If you want more information about that, you want to go on my free course on my website. This is completely free. And as you can see, price at the London Open here just tried it, okay? So we broke it. And now we try it and we gain it, okay? We gain it as a resistance. And we add it as a support. Okay, so that's what's happening here. But if I don't have, especially this at my golden zone area, I have also the yesterday's high. And this was quite easy, and that's why my algo took it. It was a quite easy short to take without really any hesitation on both manual automation, because everything is met here. The take profit is here, and the SL to break even is here. Why? It depends what you do, obviously. If you look at my video where I talk about Apex, for example, where you have trailing drawdown, you want to be a bit more aggressive with trailing, right? But here you want to let space. For example, for my algo, we realize that we need to get more space because we could get wicked out for break even quite often. So this is 70% of the profit target, and then we just check to break even. And if you already here, there's a pretty big chance you go for the take profit. Okay, so that's really it. Let's find another example here. For example, here you will be tempted to take, and I think I saw this yesterday on my community, to take the low of here and the high of here to take this retracement. And you will tell me, Pablo, it worked. It did work, but it's not as sure as if you document your setup that you will have a good setup. It's much better to take a nice swing where it broke a low. Here it broke lows, okay? It broke lows here. And then here it broke a high here, where you get a nice retracement. So it did go to 0.5, yes. But your idea would have been, yeah, because we are close to 0.5 and we have potentially levels going on here, okay? So I think it's better that you take the time to document, okay? Document what will be better for you, but take swings that breaks lows and highs, because the probability of continuation is much higher than taking any pullbacks, any small pullbacks of a swing. If you want, for a beginner, I think to document a 0.5 situation is so much better, because you can take the big swings, okay? And there is no problem. Also, sorry about this, when I don't take only swings that I see visually like this, I also take breaks of highs and lows in a smaller scale. So as I said, I'm looking at highs and lows as the wick on the lower time frame. And as you can see here, we add highs, okay? So that's a bit more advanced here. We have small highs that has been made on the lower time frame situation. Here we break them, okay? This is broken and we close bullish. We didn't break any low here. We could have claimed here, but this is too small of a low, okay? I would rather like those lows when we had a nice swing up and then a pullback, and you see we broke this high. But here what happened is that we broke those lows. So those are smaller, lower time frame lows. It's not a 1 hour time frame low, but we have 3 lows that has been broken, plus this low that has been created here. So here, it's easy to think that we might have a retracement. And as you can see, yes, it didn't resist exactly 0.618, but this is still a valid point, a valid setup, thanks to the fact that you have the 0 point here. Many times, price likes to play either rejection or support and continuation if it's bullish on yesterday's highs or lows, or if you have a 0.5 as an anchor too of continuation or rejection thing. So I hope that was clear. For example, let me try to find another example. Here was a good setup, but you see we didn't break any highs, so this is not good. What could have made it easier for you is the fact that we touched the 0.5. That's why we love to have this information. Again, I'm giving you information here, not a solution. The solution for you is that once you get information that you like, okay, you need to, sorry, I will write SMS style, texting style. You want to go on the past and look if that works, but then you want to document. And if you look at 1-to-1 situation, you want to go with the samples of 100 samples minimum. So you need to be mathematically good to have knowledge to cure all the problem, knowledge here, This is knowledge that will give you confidence for you to backtest, and then confidence for you to go live. But this is very complicated. I'm just summing, make a sum up here. That's all I'm teaching in my program, for example. But this is much more complex. It's boring, but it's the job that no one wants to do. People rather like to go on YouTube, get a strategy, and try it right away. So here are just information for you to get better at envisioning things that you would want to look. Okay, but otherwise you shouldn't start to trade it just like that. Okay, anyway, I hope this was helpful, and I wish you a good day, and I'll see you on the next video.